Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing Novo Nordisk stock. We'll be using TIKR terminal to go through the financials, and then I'll sit the numbers into the DCF and we'll go into a fair value of their stock. Let's get straight into it. So who are Novo Nordisk? So Novo Nordisk is a Danish multinational pharmaceutical company headquartered in Denmark. Production facilities in 8 countries and offices in 5 countries. It's controlled by Novo Holdings, which hold 25% of its shares but have most of the voting rights. So the company itself is known for being the company for diabetes, essentially. So any products and services surrounding diabetes, all sorts of different products. I'm not going to name them all, you can read them yourself. But it's absolutely massive Danish business, 48,000 people employed globally. It is a really big company as well. The company itself is listed in Copenhagen and it's also listed on the New York Stock Exchange as well. Now let's have a look at the sales for Novo Nordisk and sales per business. So diabetes and obesity care, 86%, then biopharm, whatever that is 14%. So most of it is all to do with diabetes and fat people. Sales per region is United States, so 45%, EMEA, so Europe, Middle East and Africa, got that abbreviation right this time, 27%, rest of the world 14%, China 11%, and then Canada 3%. So diverse across the world, but about half in the United States. Would make sense because there's a lot of fat Americans out there. That's not very PC, is it? But it's true. Now let's have a look at the TIKR terminal financials, and we'll start with the income statement. 5 years worth of data. Let's have it. So all of this data is in Danish krone. Revenue over the past 5 years has increased by a decent amount. It looks like the pandemic has increased their revenue by a little bit. So yeah, I had a decent year last year in terms of revenue growth, double digits. Very good for a business of its size. Net income wise, so yeah, profits, very profitable business here. Steady profit, but yeah, really good to see. Shares outstanding have been going down, so they are buying back shares. This is only a good thing though if the company is undervalued or at fair value, because otherwise they're just wasting capital, and that's what they might be doing. So cash on hand has remained relatively stable, let's say, decreased by a small amount. Long-term debt now, we've only just had a little bit of long-term debt added to the business, so I wonder why they've done that. Something you need to look at the accounts for, look at their financial statements and see the notes. Returning earnings have increased by quite a lot. Cash flow time, so let's have a look at cash flow from operations and capex, because these two figures combined are free cash flow, and yes, this has increased over the past 5 years, so awesome stuff. So they've been buying back a few shares, paying some dividends, and that's been increasing over time, which is good. Because when your dividends increase over time, that compounds your investment as well, which is really good, because you start getting a higher dividend yield on your cost, which is an awesome thing to have. Ratios now, and this return on capital is a bit ridiculous actually, very high. And this is what has attracted me to this company. Return on capital is so high, it is just awesome. High gross profits, high net income as well, in the mid to low 30s. Very good stuff, very profitable business. Current ratio though isn't above 1. One of the only companies have done which isn't above 1, so they don't have enough money on hand to pay all of their current liabilities, which is a bit of a shame. The CCC is way above 60, but probably to do with the sector they're in, drugs. Total debt to capital is only 26% though, so not much debt in the business for the amount of capital it has. But yeah, if you like to look at TIKR terminal, head into the link in the description, use my link, sign up through that, and happy analysing. I really love this platform. It's aided my stock analysis process a lot, helps me find new companies, global screener, track investing gurus. Go ahead, once again, link in the description down below. Sign up to TIKR terminal. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets and cash flow as well. for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now on to Genuine Impact, and Novo Nordisk are not on the Genuine Impact universe, so I can't go through their analysis process as usual. But if you'd like to check out Genuine Impact, they're kindly sponsoring this video. Head over there now, research stocks in 2 minutes. They cover over 15,000 stocks and ETFs. Download the app free today, use my link, it helps me out a lot. And yeah, use this platform, aid in your stock analysis process. I always go through the value metrics and the quality metrics to see if it lines up to what I have on my analysis. I also go through the growth and look at the dividends as well to see what's been happening over the past few years. It's a really good screener process as well. You can find new companies using their screener. So yeah, go ahead and sign up to Genuine Impact. Now let's have a look at my analysis checklist for Novo Nordisk. And yeah, we'll start with my profitable high return on capital using low leverage. So this company near enough does this. So return on capital is very high at 79%, but one of the highest I've seen, I think. Margins are well, extremely high, 5-year average, which is very consistent as well, which is what I love to see. Current ratio of 0.9, so it doesn't quite hit the mark here, but you can maybe accept it because they don't have much debt going on at all. Yeah, total debt to capital only 26%, so very, very low in the grand scheme of things. Classically, European company, don't have much debt going on. Proven ability to grow, they've grown a lot over the past 5 years, which is epic. Great capital allocation, so they've issued a little bit of debt, not to worry about because it's not a big part of its capital stack. Decreased shares a bit, increase of dividend, and looks like we've had some asset write-offs, so not a good thing, but something you can take on the chin. Overall quality score of 73%, so yeah, ranks pretty decently really, can't really knock it too much. But then we get onto the buy at a fair price pillar. The most important part of investing, you've got to buy at a fair price, as Warren Buffett always says. And yeah, I don't like to quote him all the time, but it's just so true. Like you can see here, this company needs to drop by 60% to be in my fair value range. So P/E ratio of 38 and a price to free cash flow of 29. Way too high for a company of its size, way too high. $45 US. Yeah, needs to drop by 60%. We'll have a look at my DCF now. And I've not even been crazy with my DCF. Analyst estimates from marketscreener.com. Probably use TIKR as well actually, because they're the same free cash flow estimates from analysts. But yeah, I've been quite, generous with the free cash flow growth and stuff. So yeah, what can I say? It just needs to fall. $45 per share. Yeah, what's it at now? So currently 109, sorry. So yeah, it needs to drop. Simple as that for me to be interested. And when was it last at 45? Oh wow, okay. So 2019 was it? Yeah, May 2019. So it's been a long time since it's been. Oh, did it get there? Nearly got there in the pandemic crash. So yeah, who knows what will happen with this one, but what can I say? It's a high quality business. I like the look of it. It would be good to get a pharmaceutical company in. I think this is one of the highest quality ones in the world. But ultimately, you've got to buy these companies at a fair price, and currently it's showing at too high valuation. Very extreme for a company of its size, so it just needs to fall by a lot. Yeah, there's nothing more to say apart from good quality company, but it needs to fall in more than half. So there we have it. That was my full stock analysis for Novo Nordisk. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching, and I'll see you next time. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.